Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Welcome to my weekend video. I'm Justin Waite, small cap investor. Why small caps? Because they have the potential to multi-bag, to return you multiples of your initial investment. High potential reward, but it comes with high risk. All right, so you've got to know what you're doing. By the way, if you're new to investing, I'd suggest starting with funds. I've done a sort of recent video on funds worth looking at. It's a good start and it's a good easy way in. Okay, I'm going to be looking at news of companies I own. It's 4 companies with news. I'm also going to be talking about a company I've sold and why I've sold it. All right, but let's get on to the news. By the way, if you like this video, by all means, hit that subscribe button and the notification bell. Very important. And if you have any comments, put them below. I will try and get back to you as soon as I can. Any questions, any videos you'd like me to cover, or any ideas, please put them below and I'll get back to you. All right, so first and foremost, first up, Bidstack. So we are 57 million market cap, down on Friday, and it's been in a bit of a downtrend of late. It's under this, the 200-day moving average. I look at the charts in the week, so I'll do a video on that. But some very, very big news. Massive news for Bidstack this week. Strategic partnership with Dentsu Aegis Network. I got to admit, I'd never heard of this company, but they're massive. So the tie-up encompasses a partnership framework allowing Dan to scale access to Bidstack's in-game inventory on a programmatic basis globally, giving video game publishers frictionless access to one of the world's largest agency holding groups with $54 billion of spend from 60 markets under management. Now, I think it helped when James, in his comments in the RS, pointed out how significant this was. Because let's be honest, we've done deals with lots of big sort of programmatic platforms, lots of big companies. But he did say, James, I believe this is the most significant announcement we have been able to make since coming to AIM. I want to personally put on record my admiration for the work achieved by our staff at Bidstack HQ over the past months. The video gaming industry is exploding in scale, and the passionate and deeply immersed video gaming communities are now accessible to Dan's clients. It's a sign of great progress that the advertising community are now figuring out how to maximize the opportunity for brands in the video gaming world. We look forward to being a great partner of Dan. And just to underline, how big this company are. It's multinational, of course. And it's got 40,000 people and operates in 145 countries worldwide. So that's very big news. And also welcome news as well, which is where they've been earning money and been in for a while, is the extension of the Football Manager agreement, multi-year partnership with Sports Interactive, Sega World's leading developer of football management simulations, by further 3 years, giving Bidstack exclusive rights to serve native in-game ads to the advertising inventory within Football Manager. The extension follows the success of serving relevant native in-game ads in Sports Interactive's Football Manager 2018 and Football Manager 2019 titles in a non-intrusive, fully immersive way that does not break the gamer's experience. Football Manager 2020 will release in November this year for PC, Mac, and the launch title on Google Stadia. This is very big. And of course, this week we have the interim results, H1, half one results for Bidstack. Now, if you're not familiar as to what's been happening here, essentially these are not going to be impressive on a revenue perspective, but operationally they'll be very impressive, I think. And I think if anything's going to happen, hopefully, that lack of revenue is priced in. James has said several times in the podcast, the first half of the year, and in fact, back in the final results, they said revenue will be back-end weighted. That means revenue will start generating properly towards the back end of this year. And this because, they've only just signed up to all these programmatic platforms that allow seamless scale, that James keeps saying, of money generation, of revenue generation. So we're not going to see masses of revenue generation in the first half results, which these results are up to the 30th of June this year. So a lot of this sort of revenue generation hadn't been plugged in, so now it's being plugged in. Now the money's starting to come in. We will only see the fruition of this revenue generation in their final results next year. Or maybe they do a trading update. But hopefully we'll see some decent, post-period results within these results. But it won't be talking about revenue generation. So what's going to happen to the share price? Don't know. It may be priced in because we've had a bit of a dip of late. It may dip a little more. It may rally on the snooze. I don't know. What I'm saying is, have patience. You know, I saw someone tweet out saying on this news, on this the big news I just shared, saying that I hope the share price goes north because this is the worst performing stock in my portfolio. Well, mate, that's a reflection on you, not Bidstack. It's my best performing share because I bought at the right time. You know, shares are all about sort of timing and where you buy low, sell high. You bought right at the top. That's a reflection on your share buying, not the company. The company's achieved heck of a lot. It's what I say. I keep saying it's one of the most impressive companies on AIM today. In fact, in the UK today, I think it's one of the fastest growing companies. That is why the share price shot up from like 5 pence to 40 pence. That's why it's up there. It may come back, but mark my words, this will rally again. There's plenty more left in this. And you've got to look at it like that. You say, okay, where are we now? 23 pence. Let's say 25. Let's say I buy for 25 on Monday, if I'm lucky. And I hope to see a rally of, up to 30 pence within 6 months. That's percentage-wise, that's very good. Let's work out the percentage of that. So 25, 2.5 pence would be 25. So that's 10. So 20% is a good deal. You can't get anywhere else. So if you're looking at standard, investments, you get on a bank these days, you get 1%, 1.5% if you're lucky. So you're getting 20 times that pretty much, within this investment. And I believe it'll get to 30 pence within 6 months, So, and I think, the more, when we start seeing some more news coming through and some evidence of the revenue generation potential, it'll fly. But this is a very exciting company. As always, have patience, Patience is always more opportunities to buy. So those people that are buying at 40 pence or 35 pence up in Bidstack, you pretty much got caught up in the hype and the hope of this company. Share prices always come back. There's always more opportunities. Listen, don't go rushing in. The first half an hour, in fact, I'm not going to tell you what to do. Do what you want. But generally, in the first half an hour of the market, it's probably not a good time to buy if the share price is rallying. If it's coming back, like I said before, these results are looking back, okay? They're now, 3 months out of date, and they're looking back. And the latest they reported on is the 30th of June, looking backwards. What you need to be doing is reading what they've done since and looking forward. So, okay, because there's a disjoint between the share price and the news that's been reported. If you know what's going to happen, like I said, this company, even on a modest level, let's be honest, I think now they'll start generating revenue and the margins will be good, but we still have to find out what they are, But, have a figure in your mind. What percentage gain do I want to accept? And look at market cap. So it's now, 60 million market cap. Will it get to 100? What percentage gain is that? And look at that in terms of what do you hope to achieve? What do you hope to get from a share? So looking at share price, look at the potential where it could go and be conservative. Okay, what percentage gain am I hoping to achieve on this investment? What's your return on your investment? Always think of that in terms of that. Don't just think it's going to the moon. It's going to the moon and getting carried away. Because when you get carried away, you start buying at silly prices. Okay, Bidstack, very exciting company. I look forward to this week, see what happens. If it dips, I'll be taking advantage, Next, Immotion. So they've had news out. They had the interims, of course, but they had a partnership agreement. They're pleased to announce the agreement's 3 further installs in this fast-growing aquarium sector. The first of which is Dubai Aquarium, sited in the largest shopping mall in the world, the Dubai Mall, which boasts over 80 million visitors per annum. So Immotion will install an initial 4 headsets in Dubai Mall, just outside the entrance of Dubai Aquarium, one of the largest suspended aquariums in the world, with over 140 species. Also, the 2 additional installs, 4 headsets each, are in Texas, the first in San Antonio, and the second in Austin's Aquarium. So all looking good here. What I quite like about it, this is early, still early stage, sub 20 million market cap, revenue for the first 6 months, 1.3 million. Okay, you say, if they're going to be, over the year 2.6 million, they've had 18. I'm going to defend this because if you look here, strong summer months, they did almost as much as that. Nearly 1 million in 2 months in summer. And also, like I said, these are looking back. These are 3 months out of date. And if you look at how many installs they put in these VR headsets in the last 3 to 4 months, it's accelerating quickly. So these figures are out of date really out of date. So 256 centres, 33 further contact installs expect the next 3 weeks alone. So 33 more in the next 3 weeks. So monthly underlying EBITDA break-even expected in Q1. So the business is heading in the right direction. Partner model gaining considerable traction. High quality signings. Most recent partner Dubai, San Antonio. Aquarium sector outperforming. Strong pipeline. Placing completed. Raising 2.4 million. Cash on hand 2.3 million. That's of late. And the cash burn is coming down. The revenue is going up. So it's heading in the right direction. The guys have skin in the game. I like Martin, very clever businessman with an excellent track record. Worth putting on your watch list. At the moment, the share price is at that level that the directors bought in the market recently after the placing. So, like I said, this is a business now, not having to go back to the market. Cash burn is coming down, revenue is going up, and they're hoping to get a break even. That means they will not be using cash, earnings by Q1. So they are generating value. So it's heading in the right direction. Next I want to talk about is Safestay, 33.5 pence. Net asset value per share, 41.8 pence. So what does that mean? Sell all its assets and pretty much they get back 41.8 pence. So nothing is priced into this. The potential of where it could be going is not priced in this. It's way below, basically. It's bit parts, all the parts of the company, it's way below that. So you could say it's undervalued. They're cash generative, they're going to be making a profit, and they're growing very quickly, and they're still only valued below, almost what, I can't do the math there, but 8 pence, something like that. Do that, but I just genuinely think this is, I don't understand why. I know there's a seller in there. I don't understand why this is undervalued so much when they're doing what they said. So now they've got 16 hostels, approximately 4,000 beds, including hostels in Glasgow, Paris and Venice, currently under development. So these, hostels, paid for, the cost is gone, but they're not yet generating for the company, but they've got them. So across 9 European and 4 cities. Total revenues increased by 24% to 8.1 million, like says up 4%. Average bed rate increased nice by 6%. Adjusted EBITDA is 1.4 million. At the end of June, company had 8.3 million in cash in the bank. The freehold 161-bed Pisa hostel, acquired for 3 million in June, has traded strongly. Food and beverage sales increased by 31%, which is very good because the margins are very good now. And I think they're heading that route where they're trying to offer decent food and beverage outlets and restaurants in hostels because it's a good margin on it. New restaurant in Barcelona, Pies de Gracia Hostel, and completion of a 73-bed extension Elephant and Castle Hotel, full renovation in the bar area. So H2 and beyond, they talk about positive summer trading. Board expects to be revenues for the current year to be 17 million, adjusted EBITDA in the region of 3.8 million. 18th of December, acquisition of freehold site in Glasgow, 3.15 million, converted into 200-bed hostel. It's already earning as a hotel, but look, it was quadrupling the beds there. Elephant Castle Hostel revalued following the 73-bed extension, 2.68. So their one property there is valued at 26.8 million. Okay, 16.7 pence per share. That's basically more than the value of Safestay. It's valued at 21 million. 24th September, announced the execution of agreement to acquire 50% stake in a site in Venice, which will be converted into a 660-bed hostel, the biggest so far. And essentially, the bigger the hostel, the better, the bigger the margin. Good prospects for further complementary acquisitions to be funded from existing resources, which is quite nice to hear. So they just said, they're not going to be going to the market to achieve this, which is always good to hear, these acquisitions. This is Larry Lippman, chairman, of course, famous for Safe Store. He started that off. You've seen those around the country. 2019 has been, 2019 has been a good trading, seen 24% increase in sales, with acquisition of 3 new hostels, which once completed will add 1,000 beds, increasing the portfolio by nearly a third. Our platform is now established, and we can therefore add our portfolio without, this is very good, materially adding to our structure or central costs. So the revenue is going to be coming in, the costs are not going to be going up. So that our economies of scale will be increasingly coming to play as we move to our 2020 target of operating 20 hostels. From a trading perspective, we have yet to see the full benefit from our acquisitions in Vienna, Brussels, Pisa, and more recently Glasgow, together with the medium-term potential of Paris and Venice. So, they've been sort of under construction, Paris and Venice. Paris is coming on in 2020, but straight away, these are up until the 30th of June. So we haven't seen the benefit of Vienna, Brussels, Pisa, and Glasgow yet, because those figures have only just acquired those. Also shown in the underlying value with our property value revaluation of Elephant Castle, 26.8 million, an increase of 67% since 2017. Safestay is in an enviable position to continue its positive growth trajectory, building a portfolio of well-positioned hostels under a premium contemporary hostel brand. Lots going on here. Like I said, the potential of growth where the costs aren't going up isn't priced in at all. They've already paid for these hostels, and as yet they're not recording revenue, which they will be, very soon. So it's undervalued in my mind, and yet growth seems to be doing very well. Last one, Polarean Imaging, 21 million market cap. So then announcing their results. Significant enrollment, phase 3 FDA clinical trials as clinical trials are near completion. Third trial site added at University of Cincinnati, in addition to Duke University and University of Virginia to improve enrollment. So 3 new orders for their systems. What does it say to you? These orders continue to happen, Third tranche of 1 million confirmed from the 3 million Small Business Innovation Grant. Net cash of 1.28 million at 30th of June. They also raised money. So raised 2.1. This is post-period end, of course, now. This is after 30th. Placing at 18 pence per share. Enrollment for clinical trials now past 98% in lung transplant pathway and 87% in the lung lobe resection pathway, with a total of 80 patients targeted for enrollment. So, in my workings out with my calculator, I see this as less than 10 patients they need now to finish the trial off. And let's be honest, it doesn't take long to get these patients in. All they have to do is pretty much, fill out forms, all that stuff, do what they need to do. And the trial takes, 10 seconds of inhaling the xenon gas and doing an MRI scan. So, once they get there, it'll be done. Number of xenon polarizer systems installed on August 25. So, it's not going to take long. Once they get those patients done, the results will be out quite soon. So outlook, we continue to demonstrate and reinforce our belief that Polarean's technology can be a tremendous benefit to patients and a powerful new tool for clinicians to discovering and demonstrating treatable traits in pulmonary medicine. In addition, our latest new techniques lead us in the field of cardiology. So it's not only, lungs, cardiology and pulmonary vascular disease, which is one example of the upside potential of our technology. So even though that's a big market, it can go elsewhere. So there are 40, this is outside Polarean, 40 clinical trials currently ongoing into the use of their polarizers, according to the FDA website. So not just them, they've got one ongoing. There's also 40 other trials by different institutions around the world. The burden of pulmonary disease in the US alone is approximately 150 billion, with pulmonary disease widespread and fast-growing, affecting nearly 40 million Americans. We believe that our unique medical drug-device combination, utilizing 129XC or xenon, offers the ideal solution for improving pulmonary disease diagnosis, and we are confident that this will be borne out during the company's trials. One thing on this, their biggest shareholder, which was an investment company, of course, AMP, which are financially in problems there, has luckily extended their maturity date for their loan. So it was due to be paid back on the 30th of September, this month, on Monday actually. But they've extended for another year. No other terms have been amended. But they have sold a couple of shares now. Since December the 10th, 2019, they sold 400,000 shares in Polarean, partial repayment. They still hold 14.6% of Polarean though. The sale generated proceeds of $94,000, that is. The loan balance outstanding is approximately 2.4 million. But they still have 3.7 million in shares at 18 pence in Polarean. This says a lot for me, this 18 pence thing. Amphion remains highly cash constrained and continues to consider both his short-term and medium-term financing options and work with his debt providers. Now, in their last update, they did say that something to the tune of they're very excited about Polarean's future and they don't want to sell any more shares than they have to. They didn't say that in this update. I don't know if it's significant, whether they, pointing that out, they don't want to keep repeating themselves, or whether that 18 pence there they mention is like the threshold. Above that they'll sell, below they won't. So I don't know. I don't know what's going to happen. Will they hold on now? Wait for the results, stop selling? Because of course I assume interest is accruing, so that every now and again maybe there's a rally they will try and sell. Who knows? But you've got to assume, the best thing to do here is assume they are a seller. They've got a lot of stock to sell. It's always going to be downward pressure on the share price. And of course, what you need to contend with this really, or mitigate this, is some good news coming out from Polarean, which will see buyers come in and maybe they'll sell into that. But I see them always being a seller here because it's a lot of shares to sell. Within a year, they've got to sell a lot of shares, so they'll do it into upward trajectory, hopefully on the share price. But people are starting to get worried about this, and they keep selling. Well, they will keep selling. The share price here is no reflection on the potential of the company. Sorry, I'm going to sneeze. So don't pile in. Like I said, I talked to someone on Twitter. They just piled in one go. Look at my lessons on buying. How to get the best price. I'll put it up there, okay? How to get the best price. You don't buy in one big chunk. You assume the share price is going to go down after you buy the first chunk. Just assume that. And that way you get a better price, But check that out. Okay, here's my return on the shares. Since I mentioned them in the video, Bidstack 270, Dish I sold 230, Nuformix 115, Education 22%, Integumen 22, Agronomics I've sold. I'll tell you why in a bit. Argo Blockchain 7.59, Open Orphan up 8. So we've got Polarean down 5. Power's down 5, Safestay down 14, Immotion down 14, Itaconix down 18, and Zero's down 35. Of course, that's not my actual account. I've scaled into some of these companies, so I am showing gains on certain those companies like Itaconix. I'm less down in Safestay and Zero Technology. Okay, why did I sell Agronomics? It's investment companies. The model is flawed, like I say. As far as Agronomics is concerned, I love the sector they've gone into. Fair play, it needs investment, but I just hate the vehicle, the investment vehicle of investment companies. And I tell you why. I'll give you an example. Agronomics hold about 2.6% of blue nalu. Blue nalu is a fish, so cultured fish, and they're doing very well with looks of it. I think they're valued about $16 million at the moment. So this 2.59% they hold, or 2.6% that Agronomics hold of blue nalu is worth $1.5 million. Okay, if blue nalu 10 bags, which let's be honest, that's quite optimistic. It can be done though. So it's very hot space. If a 10 bag, they'll get valued at $600 million. And Agronomics estate will worth then 11.5 million or 9.36 million. Okay, the entire company is currently valued at 8.6. So this means their net asset value, if Blue Nalu 10 bags, will double. So the share price will hopefully double, but it doesn't, because what happens is investment companies, are always valued at a discount, pretty much, to their net asset value, pretty much all the time. But even if they're not, it does double, right? So that one company they've invested is 10 bagged. The company you invest in has just doubled. First of all, if Agronomics follow their money, because I assume Blue Nalu are a way off from being cash generative. They're still losing money, they're not generating any cash at the moment. So I think there'll be further investment rounds to happen here. Okay, so if Agronomics follow their money and keep up with that 2.6%, that will double. But let's be honest, Agronomics hope to invest in 10 to 15 companies, all pre-revenue or close. Or no revenue, pre-revenue. Pretty much all of them will be. So they're going to have to fund all these companies, and there's dilution happening in all these companies. Now, you're hoping so while one made 10 bag, others may not make it. They know that. There's not going to be quite a high attrition rate. Fairly, there's not going to be success within every one of these companies. So some of them may underperform. So that's why, investment companies trade pretty much at a discount, not a premium. So the leverage isn't there. The model of investment companies is flawed. That's why I don't like it. That's why I got out. I think there could be potential here, but I would ideally love to take stakes, individual stakes in these companies themselves, like Blue Nalu, and that's why I generally avoid investment companies. That's why I'm out. Okay, I am nothing on the company. I applaud them putting investment in this sector. I just think it's a flawed investment for us, the private investor. All right. Final thing. Here is my performance down for the last 3 months, up 90%, 6 months, and over 24 months, up over 300%. That's it. Thank you very much for watching. By all means, like I said, hit that subscribe button if you like this video and you want to see more. If you want to receive the next video to your inbox, hit the notification bell as well. You will not see the bell until you hit the subscribe button. Okay, that means it'll send it to your email inbox. And by all means, any questions below? There. Do you understand what I'm talking about on this video? Is there anything else you like explaining? Ask me any question below, please. If you haven't done before, please put a comment below, because only a handful of people comment, but I know, hundreds and thousands of people watch, not hundreds of thousands, but hundreds or thousands of people watch this video. So by all means, put a comment there. If you want an easy way of subscribing, see my face, click on my face and the bell, and there's some videos you can watch. Thanks very much.